Hey everybody, this is David Skarica, stock chart of the day. So we're gonna I haven't had one since I think Friday. So, but I put out a couple. If you go to addictedtoprofits.net, I put out a couple of the interviews I did recently. That's and I talked about a lot of stuff in those interviews. So, I don't want to do overkill, and also too, like I'm trying to grow this channel, which I've grown it from a couple hundred to over 400 subs, they all organically. I'm gonna start doing some advertising as well, but I want to grow this organically and with advertising. And also one thing I'm playing around was the whole idea when I did this was I was going to do 3 to 4 charts a week, even though it's called stock chart of the day, because I do a couple 1 to 2 charts a week for the paying members and lifetime members. So that ends up being 5 to 6 charts a week. So and I don't want to do overkill because I don't want a whole bunch of videos there with 80 views. Like I like at the moment I like to have a minimum 100 views of a video. And obviously, thank you for everyone who watched my recent video on gold. And I think it's going to end up getting 600 views, which, and I didn't pay for any advertising or anything. So I don't care about this being a huge channel, but, ultimately I'd like to get, a few thousand subscribers, 2,000 views on every video. I'll start doing interviews myself on my own channel as well. I'm going to have another Legends of Investor series. I'll probably do those about once every 2 weeks. Every second week, I think is a good time. Yeah. What I might try to do is, do an interview every 2 weeks on this channel, and also do be it with a company or another analyst, or do the Legends of Investor series. So we're here, stock chart of the day. So today's is going to be two. So for two, first we're going to look at Meta. Blowout earnings for Meta, blew away virtually every consensus, paying a dividend for the first time ever. I don't know. I don't want to hype this stock too much. I've never been a Zuckerberg fan. Look, just because someone has a lot of money and successful doesn't mean they're a good person or you got to like them, right? I think Facebook's a waste of time. I don't even use it. But anyhow, you can see where, this is actually one thing he has done, though, when you start investing in your own company, in your own business, on a much smaller, tiny scale. I'm going to do it with stock chart of the day. In 2022, they did that combined with the bear market, killed the stock, and now they're kind of reaping the rewards for it. But of course, all this stuff came out on, children and kids who have committed suicide, being bullied on Facebook, and even some human trafficking going on. So, and his apology was pretty lame on it. So it's hard to get too excited, but you can see, the last, almost every one of the last few earnings, we've seen these gap ups in it, and it broke out to new all-time highs. So one of the Magnificent Seven, Meta was probably the most magnificent, of those seven on earnings. So there's a stock chart of the day. Meta blows out earnings and breaks out. Obviously I wouldn't be chasing it at these levels. Again, it does show, like I've talked about in the past, my whole theory on maximum pessimism investing. When Meta was down, I like to see 70 to 75%, and it was down 75% here at 100 because the high was 400. And if you had bought it, in just over a year's time, you would now be up, almost 5 times on your investment. So Powell, the next part of our stock chart of the day, he kind of threw some cold water, on these rate cuts. He's basically saying that he only sees 3 where the market was seeing 6. So if we go look at the market's still not completely buying what he's saying. We can still see we've got May is now down, but still May is over a 62% chance of them cutting rates. Definitely June is almost a certainty. You see, we're 97% chance, and and there's still over a 50% chance there'll be 2 rate cuts in May, 2 quarter points. And then if we go out to like November, you'll see now this has changed a bit. There's still a nearly 70% chance there'll be 100 basis points in rate cuts, but that was 150 basis points. So that's 4 rate cuts instead of 6. I think that's kind of semantics at this point. I think as long as we see, like if you look at 1995 when the market ripped, the Fed cut 75 basis points. We'll go quickly look at it here. And I'm going to also show you gold. And then I'm going to end the stock chart of the day. But if we go look at, we're going to go look at the IRX, which is the short-term rates. You can see here. If we go back, we'll get a start date. We'll go back to 1993, and then we'll go to the end of 1995. So we can see the rate cuts in action in 95. Here we go. And what we can see here is, yeah, go look at 94. They like now they were pretty aggressive. They raised rates almost 300 basis points, 275 basis points. And then in 95, they cut about 75 basis points from 575 to 5. And like, if we go look at the S&P, the S&P absolutely ripped on that. Went from, now granted stocks were cheaper back then, but the S&P went from 450 to over 600, went up over 30, over 30%, and didn't really have much of a pullback. I think that's still the record year for most new all-time highs in a year. So, and then we go look at the gold stocks, XAU, in 95. I know this doesn't really look like much, but we had a big move here from over 40%. This big move was really in 93. But again, they cut rates just a few times in 93, and go what gold stocks did. They were coming off cheaper levels, but we still had this good move in gold stocks, even with very subdued kind of rate cuts. So and if we look at gold itself, you'll see gold had a pretty good rally. It went from like 370 to over 495. Actually, if we go up to 96 is when you'll really see the gold stocks. Yeah, see this early 96. So that was about a year. And you can see gold went from, again, 370 to 420. And the XAU actually went up over 50%. You'll see right here. Yeah, went from just about 100 to 155. So, and then of course the S&P did fantastically. So if we go look at gold at the moment, and this is what I'll be ended off on, gold took a bit of a whack on that news, but now it's back up over $10 today. It just looks like, again, we're kind of in this consolidation. We're going to go back 5 years so you can see the resistance at 2100. We're in the consolidation below this resistance level here. And you can see since this low here in 2022, this pullback here, this pullback here, the pullbacks are getting smaller and smaller. So I would expect us to hold the 200-day moving average on this pullback, probably, which would be like, I would think we would hold, say 1900 at the worst, and then move higher. And again, I talked about that 2003 scenario where gold kind of had that spike, kind of like we saw in November, December, in January of 2003, pull back into the spring and then took off. So I think as we get closer to those rate cuts, people are still worried, because he's trying to throw cold water on them, that they might not happen, but I think they will happen. And I think that's when you'll see gold act really positively. And with this being such a huge form of resistance, the breakout is probably going to be quite large. Okay, so that's today's stock chart of the day. Meta blows out on earnings. We've seen the GLD. We see gold kind of rebounding, and we're seeing, maybe 1 or 2 less rate cuts being priced in, but we're still seeing, between 3 to 4 rate cuts being priced in instead of, say, 5. So, and I still think, like I said, like we saw in 1995 or saw in 1993, even a few rate cuts like that will be very, very positive for the market, or and definitely for precious metals. So everybody take care, and I hope you enjoyed this.